Good morning, ladies and gentlemen, and welcome to the show on this Thursday, the 26th of August, 2021. Thank you for tuning in. You know what? Out there on the West Coast, they bring in the shipments from China and stuff. They're all blocked up, you know. And China, their port is just starting to open back up again. And so container shipments, container shipment prices and everything, and also lack of supply on an awful lot of items across the United States of America is going to drive prices up on things you buy that come from China. Also, it makes its way into the things you buy in places like Walmart or Dollar Store or anything like that. This inflation is continuing. It's trudging on right now. At the same time that the system's starting to stall, the financial system is starting to stall because there's been no new stimulus or anything. Uh, Now, this tightening that they're talking about, the Fed, they're talking about tightening. That tightening in real world terms would not have a great deal of effect to cut back on quantitative easing. Quantitative easing doesn't tend to make its money into the actual general economy. But stimmy checks do, big time. They're not coming anymore. Stimmy checks really do stimulate the economy massively. And that's what we were receiving. One flurry of stimmy checks, and then later another flurry of stimmy checks, and they were coming in. And that was having the effect of increasing consumer inflation tremendously, where quantitative easing doesn't really do that much because the money doesn't make its way into the general economy. Okay? So that's off now. The stimmy checks are off. And you just turn that switch off. People have started to be, all around the world have been relying upon that. That's the strong drug that makes the economy run. It's gone now. And so now the wheels are starting to fall off. At the same time we're heading into next winter. I think I'm not sure if we got enough momentum to carry us through Christmas into next year. Maybe we do, maybe we don't. But I'm going to tell you guys what. Next year is setting up to be the year that the wheels really fall off of everything. And we can't do it again. They can't do it a second time, this whole thing about stimulating the economy without putting us into a hyperinflation. Sending out stimmy checks and everything again, doing what they did when COVID came in. They got away with it that time, kind of. They created 1970s style inflation. But if they try doing that again, but they might have to, and I think they're going to have to come next year. Next year is the year that the wheels fall off of everything. That's what it's setting up for. So, I told you guys quite a long time ago that we were going to have a good Christmas this year, and I still kind of think we're going to. But enjoy it, because next year is going to be garbage. We're going to have to ride through a terrible financial crisis, I think, next year. So, anyway, I shouldn't be such doom and gloom, but I mean, this is what it's setting up for. Let's get in there and take a look at the markets. Start the charts right here. We're going to take a look now at silver price. It's 23.65. It's down 21 cents on the day. Let's take a look at gold. Gold price is starting to go up. It's up $5.40 right now. Gold catches a bit off of a fear trade. It's $17.95 right now. Let's take a look at Kryptos. Kryptos is 2019. Let me just refresh the page. Yeah, 20. And the price of Bitcoin is 46,837. Can't seem to get over that $50,000 mark right now. But the thing is we're at the peak of the energy from it's like the peak of the wave of the energy that was created with all that stimulus that they put into the economy. And right now, and cryptocurrencies, are a speculative asset. They're a risk-on environment. Really helps the cryptocurrencies. You know, right now, they're not putting the money in like they were, and so it could flip to risk off very quickly. Let's take a look now at the Dow Jones. Okay, let's get it up here. It's down 89 points right now, 35,315. Awaiting the word from Jackson Hole symposium, I guess. Okay, let's take a look now at the crude oil. Crude oil's at 67.87. It's down 49 cents on the day so far. Now let's take a look at the MOVE index. The MOVE index today is at 64.51. So the MOVE index is taking a jump. It's starting to go up. It was in the 50s there. Now we're in the 60s, heading toward the 70s. This is your stability in the credit markets. Just like the bond market can sense danger ahead, the credit markets can too, and this MOVE index, can sense danger ahead. And I see it made a bottom and it's starting to drift back up again a little bit. Let's take a look now at bonds and rates, and what we're looking at is a mixed bag. So the yields are not moving very much today. One of the biggest movements is in the US 20-year. It's moved 1 basis point down. Most of them, the 10-year is unchanged, and we're looking at, it looks like 1.4 basis points in the US 30-year, 1.94, and the 10-year is at 1.34. Now let's take a look at the US dollar index today. And the dollar is at 93.02 and rising. I think we're going to see strength in the dollar because the currencies the dollar is compared against, the dollar is the best one. And when we're going into a crisis like this, people like to be in cash, and they like to the dollar tends to go up when we're going into a liquidity crunch, that's all been generated by the Fed right now. Because look at how much liquidity they poured into the system during the COVID crisis. And it's drained out, The Fed wants to keep these bond yields from going too high. Knocking back the inflation. Keeps the bond yields from exploding to the upside. It's totally in the Fed's interest to do that, And this is probably part of the reason is the bonds always front run. They front run things. And this is probably part of the reason why we haven't seen yields exploding to the upside, because we have had a moderate to high inflation lately, and yields should rise in the US long bonds. They should rise. But that would break the system, and the Fed knows that. I mean, let's face it, the real estate market's one of the bigger markets out there, one of the bigger bubbles, and they cannot afford to have rates climb on the real estate. It's very sensitive, mortgages and things, and people's buying, and it's already going negative in the real estate market. Okay, stay tuned, guys, for the pets coming right up. Hello, ladies and gentlemen, and welcome to the pets section. Now, our first pet is, he says, "Hi, Glenn, I love your show. I've been a subscriber for years. This is my beloved boy, Cannonball." And he says, "I actually didn't plan on the next tie. I just couldn't find his leash, and it was time for a walk. Keep doing what you're doing, Jason." And so here is Cannonball with his blue necktie. He's awful cute. Look at those wrinkles under his chin. Okay, now let's take a look at our next pet. This is Romeo, and he's an 8-year-old English cream Dachshund. So this is Romeo, and he's very cute too. Now let's take a look at our next picture. And he says, I really enjoy your channel on YouTube, and I think it's a nice touch adding pet photos at the end. And this is his cat. Pictures of his cat called Evie. Evie. His cat's called Evie. And he says, Evie is fascinated with our dishwasher. And he can't wait for somebody to open it up for him so he can get inside. He's a fun cat, and he's been with us for about a year now. This is Billy's cat, Evie. And, you know, I'll tell you one of the reasons why I think Evie likes it inside the dishwasher so much is there's an awful lot of different smells in there from different types of food and things. And animals love different smells, you know, different things that they can, like the food generally that's still a little bit of it on the dishes here and there. And this is one of the reasons. But, you know, cats oftentimes in the wild live in caves and things. And they really like to get into spots where they feel safe. It's like a little cave, you know. This is why they like to get into boxes. And they like to get into things where it's part of their psychology, because they used to live like in caves and things and places in their natural environment, you know. These big cats and things, you know, like to get a place where they can, you know, like out in Africa and stuff. Okay, listen, thank you guys for listening to my show. Thank you for watching, and we'll catch you guys in the very next episode. Bye-bye.